All right. Review for December 26, 2025. Friday, the day before, the day after Christmas. And um, this is a video review of my day. I used to do these videos every day. I haven't done them in a while. I think I'm gonna start doing them again. I'm gonna try to keep this one short. I ramble a lot, so apologies whoever's listening to this if I go on for too long. But this is sort of my way of ranting, like blowing off some steam, organizing my ideas and everything about my day. So this is going to be focused on silver because that's what I trade. I'm going to go over um, the setups. I'm going to go over the way I executed and the way I traded. I'm going to go over my mental, emotional, and mental state during these trades. Let us start off with by saying that I blew up once again. This should have been a day that should have been a home run for me because basically my setups were there, they were playing out, and this is just a good example of doesn't matter if you have edge, it doesn't matter if your A plus setups are there, um, like um, you can still lose, even if the trade goes your way because of your emotional state, because you're on tilt, because you're oversized, because for a number of you know reasons and faulty executions and so forth. So and what happened to me this day is uh, a little bit of a little bit of each of those things. So um um again, this was actually a historic day. I don't know if you guys are. I hope you are, but you should be familiar with what's happening in silver. I'm not going to get into that too much, but on a day like today, if you're trading in a real prop or whatever, you don't have a daily stop. Like it's absurd. It's a they triple, double, or even triple your risk because it's a day where your trade is on. There's a especially if you make a case for it's not just a technical setup. It's a really an A triple plus setup where all the technicals are in place, but the fundamentals are also backing it. Everybody understands all the all what's happening and the edge behind the trade, and so nobody's gonna stop you, whatever. But it's because I'm doing that stupid evaluation, and well, there's these silly rules, and you have to. That's it. That's what it is, right? So I have a $1,200 stop, daily stop, and well, you have to not hit it, and I hit it, and that's it, and then I got locked out, and I missed out on this whole thing. So this could, and the other silly rule when you're doing an evaluation on these stupid evaluations that these are rules that don't apply in real life, right? Like this is a trade where even if with this is a day that having $1,000 stop loss, so that's your risk. Even within that risk, if you don't stop out, this is a trade that you can make 10, 15, 20 times your stop. This is a trade that you can make five figures, 15, $20,000 easily. And that doesn't count either on in valuation because you have a consistency rule where they only count 1,000. You can only make $1,000 to move forward on your account, which is also really stupid. So this would have been wasted, to be honest, because you make 1,200 bucks and then that's it. That's all that counts onto your account. So that's not normal either, but okay, whatever. That's what it is. So, anyways, um, just really quick for context, I'm not going to go into what's happening with silver. Everybody, we all probably know. Um, oh, this is my 5 minute chart. So, But you know, basically this thing I've been watching it. This is a 60-minute chart. I've been, you know, this has been basically a parabolic squeeze from, let's say, from this breakout here, which was the day this breakout started the day before Thanksgiving, and then on Black Friday, it really, it really got going. Um, this would be Black Friday. So bam, this is it. And then we've had this basically just squeezing until Friday, and Friday is this is the most dramatic day has been Friday, and we have yet to see more, I think. So, but we're not going to go into those details, but we are going to go really quick into context into why these are A plus setups, aside from the fundamental case that's already in its own. That's a huge part of it. So if you have a powerful, strong technical setup, but you also have very strong thesis, whether it's macroeconomic or whatever it is, behind it, it makes that setup 3, 4, 5, 10 times more powerful, right? So that's where the real edge is. So um, so anyways, we've had a series of this, throughout these past weeks where it's been squeezing. Every time we have a good breakout setup or good long setup or breakout setup, they usually play out. And the pattern that we've been seeing a lot in silver is, we get these breakouts. Let's start from here, for example. This was December 15th. So, we got, we got every time we see structure with a trend line, a downtrend, and a strong VPOC, with a strong um, um, volume profile, and we have a strong VPOC there aligned with that. Every time we reclaim that VPOC, um, we're gonna get a squeeze upwards, and that keeps repeating itself, and that consolidates, chops around. Weak open, that's also been a theme, by the way. Every time we get into the open, especially after a run up, we always get a weak open, so a flush at the open. Most of the time it's been happening. Every time that happens, that flush is typically soaked up, and then it ends up, in this case, this was, I guess I'm not sure if I traded this or not, but this was also a trade here. Again, structure, strong VPOC in the middle of that structure, fails, higher lows, you know, basically a V shape. This is not a V shape bounce, but okay, bounce, higher lows, reclaims that VPOC, bam, momentum comes in, look at the volume, bam, breakout. So this is the way this thing breaks out. Same thing happened the next day, literally the next day. So we have some structure here, weak open, flush, bounce back up. In this case, we have a strong VPOC as well. It doesn't quite reclaim it, fails again, but it ends up reclaiming it here. And same thing. And typically these things overnight, Asia session, early Euro session, that's when most of the breakouts are happening. So anyways, we have the structure here. We extended this trend line here. It ends up again testing here, consolidating against that VPOC, reclaims it, and we have a breakout. In this case, a little breakout, but it still counts. Um, tick value in silver is very high. So this little move here from 040 to like 340, that's like 60 ticks. And 60 ticks in silver means if you're trading a normal contract, it's one contract is $25 per tick. So um, uh, calculator, $25 times 60. I'm just lazy, so I don't want to do the math. But anyways, it's $1,500. That little move there, just one contract, just one contract. So that gives you an idea. Um, um, so that counts. A little breakout there fails, but then holds up, and it ends up being a real breakout. It's just chopped around there for a little bit, and then that ends up really breaking out 10 times more, 10 times that amount. So you're trading one contract, and here you capture this whole move, and you're making 10,000 bucks. So the tick value in silver is you know it's a thing. We had this setup here, by the way. Look at that VPOC there. Look at the structure here. Very strong VPOC. Because we had sort of like a double distribution there. So we had here, we had it create some structure around that VPOC, and then when it fails, it looks like this dip here breaks, takes out that VPOC, and then we get, I guess that I did trade this at some point, and then we get this pop, this breakout here. And same thing, that's been the theme. That's been the theme. It's very reliable because we are in the middle of a higher time frame squeeze, and we have a strong fundamental reason for this to be happening. So every time we get these technical setups for breakouts, they pretty much all the time play out. Same thing here. Look at the VPOC here, right smack in the middle of that wedge into the close. What do we get later? Bam, another huge breakout. So that's how this thing's been trading. This day's looks like it's like chopped around. Um, but then always, whether it's a flush or just chop, it always ends up getting like soaked up, bought back up, drifts back up, and when it takes these highs, it doesn't break out right away. But you have to be patient. Structure, and then bam, breaks out of that structure. In this case, you know, um, really powerful breakout, gets sold off. Again, at the open, weak open. This is the best part, by the way. I don't know if we've seen it happening, sort of, but not so much. But here we saw it happening more. Every time we see a dramatic flush and then a real strong V-shape bounce and then close into the highs, super powerful, by the way. Like that's like a um that's and then here we get some structure here. Didn't quite break out there, but then we got the same thing here. Flush, V shape, and then huge breakout. This is the setup, by the way, that we got into Christmas, and this is the one I was all anxious about that I was gonna miss, and I ended up missing it because the move happened overnight. And we get sort of the same thing happen here before the huge squeeze here on Friday, which is the same thing. We did break out, but then it fails. V-shape sort of bounce after this flush, reclaims this VPOC, and then bam, there we go. So that's just for context. And um, so now let's go into my trading day. So um, what happened this day? What happened is, what was my state of mind first? Well, going into the close on Friday, I knew how huge this setup was. I think I texted it there on Discord. I mentioned that this was a V, the week open, the V-shaped bounce, consolidation here into the downtrend. So we have the structure here and consolidation into that very strong VPOC on the volume profile, which was a VPOC equally as strong, sort of, right? We see it there. And that was basically the point of control. Here it is of that consolidation here for continuation to the upside. Fails, but then it's coming back to reclaim it into the close, into Christmas, and this is the other part that matters, and it's like it's setting up very similarly the way it's set up into Thanksgiving for Black Friday, and and that also weighed that also had some weight in my thesis and why I thought this was going to break out hard. So we do get this breakout overnight. I'm asleep and I miss it. So I can go into the details on how I would traded this if I had been awake, but I don't want to make this video too long. But the point is that my state of mind here is I'm waking up and I have huge amounts of FOMO. I am extremely upset because I woke up in the middle of the night and I saw this shit had happened and I was like, whatever. I was just in a bad place. Um, let's just go over this really quick. This is just, these are technical setups that I use all the time. This gap was very powerful. When we see a gap like that, especially if it's like at the open, which is when it happened, it's going to get sold off. Always, obviously. So unless we're positioned here, and this is the other thing I hate about the eval I'm doing, um, they don't allow you to hold positions from one session into the other. You can't swing trade. So there's no way I could have captured this, but this is something if you're positioned here, you capture this move. If you're not positioned there from the day before, more difficult. Let's have a look at this on a 5-second chart to see how it really played out. Again, we were asleep, but yeah, this is a 5-second chart and it happened. It looks like it happened. Yeah, I mean, you could have captured some of it, maybe. If you don't hesitate and you're not like doubting yourself here and you know what's going on, maybe you capture this move. But okay, in any event, it's gonna exhaust and be sold out off of the top. I need to wait for that to fully, that sell off needs to be fully exhausted. But then every time, and I'm talking, this setup is really good because it happens all the time, but it's difficult to trade because you need to have patience and it takes a long time to happen. But once that sell-off has exhausted and it starts making higher lows, you know that this thing is gonna retrace and test the high of that gap. It always happens. This is a good trade. This is a good setup. 1-minute chart. This part is a good setup. This is what I would have. So I would have been looking for the bottom here when I see higher lows and I see some structure, and then I'm looking to trade the retrace for a retracement up into the high, into the top of that gap move. That's the first trade that I missed. But then after that, let's go back to the 5-second. This just gives you an example of, I guess it explains a little bit how I trade, how I approach my trading when it comes to these breakouts. This would have been the other. So that's the first trade here. But then when we're testing here the highs of that, the top and the highs of that gap, again, 5-second chart, and we see this. So we would be here and we're testing there. We're just below the highs, and the highs are about 380, and we're here testing 360. But what we can see here is this rectangle is actually highlighting this volume candle. So this volume candle is like 10 times the size of these volume candles preceding it. So this little chop here was like this amount, and then bam, we get this volume candle here with this testing, with this pop. That is on a very small scale and a lower time frame, it is a legit volume exhaustion. And when I see that little volume exhaustion there, I am paying very close attention to what happens next. And in this case, what happens next? It consolidates and it stays up tight and high. It doesn't sell off. So the normal thing, the natural thing for something when we have a let's call it a parabolic move, even if it's just a 5-second chart, that's a 5-second candle, but it is a pop with volume exhaustion, that should be sold off. That's where all your mean reversion people are. That's why that's what, they're fading that because these pops are always, you fade them. But if it doesn't come back down, but it stays up high and consolidates up high, and then we can get a little bit more nuanced. And if we look at now we're really zooming in. If we look at the volume, the volume is tapering. Um, this means I call it a trap after exhaustion. So after we get that volume exhaustion and we see that basically this is a sign that that volume is being trapped there, then it needs to be released. And so basically this is just what you're looking at here is that imminently it's going to give us another pop higher. so and that's what we get here. So this is the other trade I would have taken here that I missed. And then after this is also obviously, you see it here, it's volume exhaustion. This one does get sold off, but it's staying above the, I guess not the highs, but the VPOC that was created during this consolidation, which was somewhere around 340s. So at this point, when I see this getting sold off, I'm not completely out, not taking positions anymore. It does, keep selling off. But when it finds a bottom and it comes back up, if it's reclaiming that VPOC, then we're back in again. Because every time there's a VPOC reclaim or it takes out new highs, it's a preface for another move up. So that would have been the next trade, and this looks like chop, which means I would have been kind of like selling into pops, but then, putting it back on into flushes. So this would have been, it's sort of like scalping a consolidation, although it's actually trending upwards. Um, and then we see a very good case of the same thing, same principle here. You can see how a lot of volume is trading here. And we have this very strong VPOC here in the volume profile from this consolidation here. So when it's already dying here. You can see this wick, top wick here. So it looks very toppy. So this would have been, this kind of looks like, and look at all the volume being put in. This is like a real exhaustion spread out among a lot of candles, and it's already then starting to trend down. When it doesn't continue selling off, but then comes back up and reclaims that VPOC, again, a ton of volume. Look at all this volume. A ton of volume is trapped now because these are people that are shorting here at the top. And what do we get? Bam, huge momentum come in because it's a squeeze. All that volume gets squeezed out, and we see, I mean, this volume candle is 2 to 3 times larger than all the other ones. So those would have been my trades while I was asleep, the ones that I missed. So I was really upset because this is all this is all in my playbook. This is all stuff that I'm prepared for. Um, so that was so what was my mental state? Again, huge amount of FOMO, frustrated and upset because I missed the breakout. And but at least then I was mindful of not making the mistake that I've been making a lot lately, which is um, at least I didn't try to force continuation. And I was like, after a huge breakout, and this was pretty huge, look at the size of the gap. After something like this happens, it's very unlikely that it's going to just continue to squeeze. I mean, it happened here, but this is very abnormal, right? So, um, so the mindset here has to be get your FOMO under control. This thing, there's no reason for this thing. It could happen, but it doesn't have to happen. There's no reason for this thing to just chop a little bit and then keep going up higher. You need to let this thing consolidate and give you some real structure. And if in any event, trade the breakout of that structure if it happens, but you need to let it build up. So I calm down. I let it start doing that. And what I do is I start scalping the range, which is something I like to do if I'm trading NQ or if I'm trading something that's very liquid, and that's, because that's a way of getting a feel for how it's trading, building some P&L, and building a cushion to put myself in a position of strength for the real move, which is quote unquote my specialty, or the one the one that I'm that I that I really that's my setup. So but that's not easy to do here in silver, because silver is very thin, very slow and very thin, and it's just not easy. It's just test your patience, and tape doesn't move. Um, so I got chopped up. I think I got chopped, especially around here, and I dug myself into a hole. And instead of the purpose of scalping that range is to basically put yourself in a position of strength and protect yourself from a loss if the breakout ends up not happening. But I did the complete opposite. I dug myself into a hole. I was like, $500 down, which is almost half of my daily stop, um, and that just messed with my head. It just messed with my head, messed with my confidence. Then all of a sudden, I'm having to dig myself out of a hole. I have been having losing days prior to this, so my confidence is not really up, not really, good. And so then, when my trade comes along, I have no confidence to execute it well, and I end up botching it. So um, basically, I didn't believe it was going to happen. One of the reasons is because of what I just said, which is the likelihood of this thing breaking out again after making this huge breakout is not very high. And we have had some instances where after this happens, I've been trying to go for that breakout and it always fails. So I wasn't very confident that that breakout was going to go happen. So I wasn't, so, I had a limiting belief going into it. Um, but it did happen, and it was very obvious in the tape that it was going to happen. And I failed to trade it well because, again, because I was in the wrong place mentally, and then I wasn't really trading the tape, which is a very important thing. If you're not trading what you see, but you're trading your beliefs, or you're trading off of arbitrary levels and stuff, then you start getting in trouble. So I ended up botching this. I used this breakout just to make up my losses, make back my losses, and instead of capitalizing on it to, if I had traded this well, I would have made my day here. Again, I have a $1,200 daily goal, and this would have made me double that. So instead, I piked out just to break even, and then in the end, after this thing happened, I end up, you know, even more frustrated, even more so. So I was completely just uh, on tilt, on tilt, and because I was somewhere around break even, maybe minus 50 or minus $100, something like that. But again, having missed this and then missed this opportunity to trade it well, and then I was just upset. And then I ended up putting on a random trade here. Again, trading like I shouldn't have been trading. I would never be fading a move like this, but here I tried. And in an instant, literally in 1 second, bam, got stopped out, and that's it. And then if I had been patient and I had not been tilted, I would have waited for this thing to, come back, reclaim this VPOC, and then, well, this was an easy trade here. So anyways, let's go have a look at the tape really quick. Um, so this is, I usually blur this out, but I don't care really right now. So I was down $200. I was down like 500, 600, and then I sort of, when I was scalping, this is a 5 second chart, and when I was scalping the range here, I ended up fading hit here and capturing half of this move, and then I faded it here at the bottom, and I made up most of my losses. So now I was only down 200. And then it was testing here again. Look at that VPOC there. That VPOC is somewhere around 75, 100, I want to think. And we were testing that VPOC, and we were testing the downtrend. So if this had kept trading with inside that wedge, this was, I would have faded it here again, because I was scalping inside the range. But it ended up not respecting here and ended up popping outside of the wedge and reclaiming that VPOC. And that's where you need to switch from scalping the range to trading the breakout, which is what I was waiting for, what I'm good at, what I'm prepared for to do. But again, as I said, because of my state of mind at the time, because I was digging myself out of a hole, all these things, added up. I was not trading the way I trade. So anyways, let's go explain here really quick. So the top left chart is a 5-second chart. I'm not sure what I had on the bottom left, but I wasn't paying attention to that. I was paying attention to the top left. And this is a silver ladder, and this is a silver time and sales, or the tape. So this is not very common. People that trade futures don't really use the tape, but whatever, I do. And so this is what we're focused on. This was here it was gold, and this was the ES, and this was the NQ. But okay, this is what I'm paying attention to. So silver, the ladder, and tape. So let's play. So what do we see here? Well, you can see how painfully slow, right? It's not even moving. There, it's printing like, painfully slow. But here still, we can see. I'm pausing it here for a second. What do we see here? We see some size, equally stacked up on both sides, but on the offers, we see 18 and we see 13. These are, um, 3 to 4 times the size of a regular, um, these are double digits, and they're typically on the lower lower single digit. So that's important. It's just telling us, and we know that that VPOC here is at somewhere around 75, 100, so it's going to be somewhere around here. And there are people here that are trying to fade this this test of VPOC and test of the down trend line. So playing it back again. So why is that size important there? Because some people like to think that if they see some size there on the offers, that size is a sign that there's a large seller there and it's going to push the price downwards. The way I see it, if that size is taken out, then that just adds fuel for a move up if it's going to break out. So I do remember at this point thinking like, that size there is crucial. I want to see how it reacts against that size to see if this is actually going to be a opportunity to fade here, or if it's actually it's telling me that it's going to break out soon. And you can see how it's not even moving. You see, it's not printing, not even a little bit. There we go. So it took out that size, and we see a little bit of printing there on the tape, and it keeps drifting higher. And now we have, I don't know if you saw that, but we had some more size here, 15 contracts here, and it also got gobbled up really quick. And all of a sudden, and if you move over to the chart here, you can see how we just pierced through VPOC and we just pierced through the downtrend. If I am trading like the way I do trade and like myself, that's enough. That's enough for me, especially if something that's so slow and so illiquid and you see that little bit of printing and you see that little pop, that's enough for me to be like, this is not a short here. I cannot be fading it here. I should be getting ready to get in because this is going to be a long. Um, but because I was so low on confidence, I was not trading like I do trade. I doubted myself. I doubted everything that I know. I was just full of doubt, and I didn't listen to myself, and I didn't have confidence in what I already know. So um, I would have been getting long here. I would already be long, no doubt, no doubt. I would already be long here, and instead of that, I'm just hesitating and waiting. I want to see more signs, which is already a really bad sign when you want to see more confirmation. Um, so I'm waiting for more confirmation, which is really stupid. Now, look at that. Look at how the offers are thinning up. So now we have, if you look at the, I'm pausing it again. Oh, here, bam. So we had already half the size stack. So we have, I don't know how many rows here stacked up on the bids. We had half that on the offers, and now right here when I pause, now we only have 2 rows stacked up. So you see how the offers are thinning up, and we still have no prints. It's still, the tape is stalled, and so something is waiting to happen. There's like, we're waiting for a real move to happen. It hasn't happened yet, but we already see the offers like vanishing. So um, if I needed more confirmation, this is all the confirmation that I need. And I still kept doubting myself because I still kept thinking, well, what if they stack them up again and then they push the price down, which is really stupid. So really, just a lack of complete lack of confidence here. And you can see how they are, they're refreshing, and this is size, like 10 contracts is bigger than most. But and you see how they refresh it, but it's still, look at how thin that those offers are, and they're refreshing and trying to keep it from coming up, and that size they keep taking it out, and it's not pushing it back down. And let's pause it again. And now if you go to the chart, I mean it's clear as day, right? Like it's already, and before when we saw it earlier, it was just a little bit. Now we see already a candle piercing, pretty much already taking out that whole area. So, and I kept doubting myself, and I kept trying to trade like somebody a style that I don't trade, and then I started um, talking myself out of a trade and looking for reasons to be short. And I thought, well, okay, yeah, it is popping out, but it's still within the range. Like, it's still, if we look at a horizontal, which is not what we're working with here, but now I switched to a horizontal line, and I'm like, okay, it's still within this horizontal range. So, um, looking for reasons to be wrong and to be like, no, this is, it's a short. It's really stupid because within my system, this is already, I would already be long. So even though everything is screaming to me that this is about to break out, what I see on the tape, what I see on the chart, the way the tape is moving, what I see on the ladder. So pressing play again. There we go. So I got short there. And now look, now we get huge size compared to what we've seen so far. So this is 3 times the size now. So we got almost 40 contracts here. And then I remember thinking to myself, oh, that's like really big size. That might be a big seller. So maybe I'm right and I should be short here. And again, just really irrational thinking because I know from experience. It doesn't matter if I see this, we can see a 250 size flash there. It doesn't really matter at this point. One, it could be spoofing, which is actually very likely, but even if it's not spoofing, and in this case it wasn't spoofing, even if it's real size, um, um, this thing is already trapped. Any volume that's already traded into this is trapped, and the most likely thing to happen is that size is going to be taken out, and it's going to add to the fuel, and it's going to uh, increase the possibilities that this squeeze is going to be harder. I already know these things. This is part of the way I trade. But in this case, I chose to not have confidence in the way I trade. So I kept the short on, hanging, using that size as an excuse when I knew that that size meant nothing. So let's go back. And then bam, takes out the size, right? Pops 150 points there, or I don't know, like 30 ticks, and that's it. That's the first part of the breakout. So at that point, obviously, you can see here I stopped out. I was down 200. Now I'm down 430 bucks. Whatever. Um, at this point, I did wake up and I said, "What the fuck are you doing? This is a breakout." And this is the first stage of the breakout. And I have this. I know this. This is what I practice. Like all my trades, 80% of my trades are always this stuff. So what do we see here? And I think I kind of explained earlier when I was trying to give context before the trade. This is the typical pattern that I'm looking for. Um, volume exhaustion. This is a 5-second chart, so it's pretty acute. This is real, and we saw it here on the prints, obviously. So we had some price capitulation, so it popped up. But this is the important part. We're getting real volume capitulation there. And this volume capitulation was all that larger than normal size that we saw in the offers. It all got taken out. That all gets added up into this candle. Um, now, what's important here, what's going to happen after this? Because every time we get a pop like this and volume consolidation like this, it should sell off and come back down. If it doesn't and it stays up tight and high and consolidates up very close to that high that it just put in, then this is where it's a 90% chance. This is the most powerful setup there is. This is like where you're piling in with all your size because you know it's gonna give us the next leg. And that next leg needs to be volume exhaust. It doesn't end or it doesn't resolve until we've gotten the next volume exhaustion, which should be at least close to what exhausted at the beginning and maybe even more. That's what my setup is. We're also paying a lot attention to the volume profile, even though if it's a very short time frame, it's 5 seconds. But here we're going to get a good idea of where that volume traded the most within this pop, and we're going to use that level as reference. As long as we're just below that level or consolidating, creating a range around that level, when we take out that little VPOC, that's our sign that we're about to get squeezed up. So that's my setup. Now I realized the mistake I made, and now I'm going to be looking for an entry, right? So it looks like that entry is going to end up being somewhere around here. And so we're pulling back. We see that pausing it again. We see that this VPOC is sort of creating here just above the 200s. That means there's a possibility that it pulls down into 200, which is a whole number, which is always it happens a lot. So I think I'm going to be putting on an order somewhere in the low 200s in case that happens. But I should be paying attention to the tape and to the way this thing is moving. And I am not. I'm fixated on the chart and I'm fixated on arbitrary levels. I'm going to look, I put in that order there in the low 200s in case it comes back and flushes down into it, which is okay. But here, you see that little flick that we here. that little flick that we saw there on the tape, and how it kind of like skipped on the ladder. I already know that that's the bottom of this little thing after an exhaustion like that on a very low time frame. I know, so I should be hitting in um, there, but I didn't, and then it starts drifting upwards. I missed my entry. And then I try to put one above, and then it keeps going away from me. So I ended up chasing and marketing in at 275 when I could be in from like the teens. So this is really bad trading. This kind of tells you how I'm not confident, because this is not how I would typically trade. I would have been in below 220, but I'm at 260. So um, this kind of tells you how bad I am. And if you look at the P&L, I'm down, I think I was down $600 at some point. Right now I'm down 525. I don't have to be there. I don't have to be offside. I shouldn't be offside there. I'm offside because I hesitated and I didn't hit my entry when I knew. Um, because I was trading arbitrary levels, I was trading chart, and I wasn't paying attention to the tape. I wasn't relaxed. I wasn't calm. I wasn't in tune with what's going on. All these things added up. They're all really bad signs. I'm still in it. It's still, popping up. Um, but then let's go back to my mindset. I know that I am in a $500 hole this moment, I guess. And now this thing is kind of chipping away at that loss. And I'm not thinking about trading this well. I'm just thinking about, let me get out of this, because now I'm closer to break even, and then I'll figure out what I want to do. That's what I'm thinking there, instead of trading it the way I should be trading. This trade, like I said already, this is not over until it resolves. I'm going to pause it here again. And you can see how I took everything off. Well, I still have two contracts on here, but I'm going to take them off any moment. But look where I'm taking it off. The tape is still stalled. We haven't had, like I said, we need to have another volume capitulation similar to this one. That's what's going to indicate to us that this has resolved. We're not there yet. It means that we're just waiting for the real move to happen. We're drifting upwards way past that VPOC that we were working with. So we're already, and that's why I'm taking some off, because we're already in the money. We're on side by a lot, but still the move hasn't happened. So why am I getting out? And then look at the ladder, like the same thing that happened before the first pop. Look at those offers thinning out. The offers literally evaporated. There's nothing there. There's a guy here refreshing what looks like to be like size, but it doesn't matter because there's nothing stacked up. So this thing is the real move is still waiting to happen, and I'm already getting out because I'm scared of, I don't want to be in, because I just want to be out of it, break even, and I'm done, instead of holding on and just actually I should be putting on, at least 6 or 8 contracts and wait for the real move to happen. So that's you can tell there how I'm tilted. I I took that one off when I saw the offer stack up a little bit there, but that means nothing. Then they thin out again. This guy keeps refreshing, but it doesn't matter. It keeps pushing up higher. So this thing is clearly, and these are the best ones because it keeps drifting higher, and we still don't have resolution. We don't have resolution until we see a real pop, and some real prints on the tape. We cross-reference with the chart. We see that the volume is, starting to build up, but we still don't have a sizable volume candle to tell us that that anything has changed. So we need to be in it. Um, in this case, I'm already out of the trade, so I'm already um, deep inside, I know that this thing is about to make a huge move. So I'm already feeling extremely frustrated, feeling like a loser, opening up my fucking journal, and then starting to fucking journal, rant away at the journal. In the middle of this trade still being on, where what I should be doing is like looking for a way to get back in, knowing that this trade has not resolved yet. And instead of doing that, I am in my journal ranting and like blah blah blah, and I missed it, I missed that, blah, and I'm always curse and my journal entries are really negative always. So I'm really upset um, because I botched the trade, and I did because of starting with the first mistake was when I was trying to fade it, all that stuff. But still, it's all kind of like that search to things are perfect or they're not. Like it's a perfect trade or it's not. Shouldn't be like that. Yes, I ruined the first part of the trade, but I do know deep inside that the real trade is still yet to come. But I'm already, you know, I already gave up because it's not a perfect trade anymore. So, I'm in that again irrational, tilted emotional state. I'm not thinking about P&L, and I should be thinking about P&L. It doesn't matter if it's a perfect trade or not. I still need to nail this thing and make the money I need to make. But no, I'm not thinking about that. So, I'm there, journaling there, and bam, this is where the real move happens. We were in the 300s, bam, now we're in the 500s. So that's again 50 ticks. Look at the chart. This is exactly what we were looking for. And look at the size of that move. And now look at that volume candle. It's double the size of this volume candle. That's the real resolution. And actually, it's not done. It's just getting started. That candle gets a lot bigger, and this thing pushes up a little, not a little bit, pushes up another 200 points higher. So we're in the mid 500s. It pushes up into like the 700s. So it's insane, and I'm there like, ranting and like, typing inside the journal and stuff while this shit is happening. And in this case, I think I'm typing into the journal as I see this happen, like, fuck me, this is happening while I type into the journal. So it's like just insane behavior. Um, look at the size of that move. And again, it doesn't seem very dramatic on the tape because it's, again, overnight action on an instrument that trades thin, but in relative terms, this is like, this is a capitulatory move. So I'm not in it anymore. I missed the whole thing. The trade was good enough that it could have made my day, and because of being on tilt, I ruined it. Um, I like recording screens because I can review the tape, I can review everything, but also because I can see my behavior. Like you can see how sick and irrational my behavior was during this thing. Um, I'm gonna pause it here. Then there's another, the same thing happens again, where it's the same setup. Volume exhaustion. It consolidates here up high and tight, and it holds around this area, around that new VPOC being created, and it ends up squeezing up a little bit higher. But at this point, I did decide, okay, I ruined the first half of the trade. Um, this entry, even though it did happen, this is way more risky. And I do have a rule that after my trade is after the first significant exhaustion, then it's the resolution, the squeeze, the trap after that exhaustion, and then squeeze, and then this move. Sometimes there's a third move, sometimes there isn't. This time there is a third move, but that one is risky. So I did choose to not take that one, and that's okay. Um, but if I had been in a position of strength because I had built P&L, then I would probably have captured this because I wouldn't be risking gains. I would be risking, and maybe I would have captured that last leg. So Um, this is just so I have so I have this for the record. I'm not going to narrate this anymore, but I want to play out the whole thing without pausing. And it doesn't really take that long, but um, yeah. So that's it. I'm just going to leave it playing there. All right, that's it.